Hello and welcome to this Forex Preview at xm.com. I'm Maria Bashardis and joining me is investment analyst Christina Partheniou. We'll be discussing UK inflation and the outlook for the pound. So Christina, the UK economy appeared surprisingly weaker in the third quarter this week, and the employment data wasn't encouraging either. But markets continue to price in a very small probability of a rate cut by the Bank of England, despite two committee members calling for a rate reduction last week. Do you think that inflation numbers on Wednesday could strengthen the case for a rate cut?
Well, not really. I mean, the central bank is behind its inflation target since July, and the headline consumer price index is expected to further slow down to 1.6% year on year in October. Under other circumstances, the central bank would be seriously thinking of a rate cut, and in fact, it has left the door open for it next year. But with the unemployment rate being the lowest in more than 40 years and wages rising at the fastest pace in a decade, consumers could still continue to support the economy and inflation, and therefore the central bank could take advantage of it and delay any rate cut until it gets a better picture of whether Brexit or a second referendum could happen after general elections next month, or whether the country could end up with a hung parliament and more Brexit uncertainty. So for now, the UK seems to have avoided a disorderly exit from the EU, but general elections could still flip the coin, and the central bank would like to be on the wrong side. So overall, we expect the Bank of England to hold patient unless, of course, Brexit uncertainty rises and economic releases sharply deteriorate.
I see. Turning now to sterling. Despite disappointing GDP growth and a discouraging employment report, it remains quite resilient. What's the outlook for the pound this week?
Exactly, all attention is now on Mr. Johnson's election campaign, as markets are trying to figure out whether the UK Prime Minister can win with a majority next month and, more importantly, pass his Brexit plan through the Parliament. So the pound is expected to be more sensitive on political headlines and less on data releases this week and probably until the end of the year. Definitely the future of the UK economy is still cloudy, since negotiations on future trade relations with the EU could be more complicated. But first we need to secure a withdrawal agreement to move to the next level, and any positive headlines that we're heading to that could help the pound to gain more ground against major currencies such as the dollar and the euro.
Christina, thanks so much for joining me, and thanks for watching at xm.com.